Predictions of the imminent collapse of the US dollar have rattled global financial markets. These forecasts are rooted in concerns over mounting US national debt, trade imbalances, and political instability, which have raised doubts about the dollar's continued status as a preeminent reserve currency. At a high level, Jim Rickards encouraged in a discussion that brought to light heaps of challenges and difficulties people currently face. He was quick to clarify that his intention was not to be perceived as a pessimist or a harbinger of doom, despite frequently addressing these pressing issues. Instead, he emphasized that despite these challenges, individuals need not resign themselves to victimhood. They retain the power to take action and navigate the uncertainties, provided they have the foresight to anticipate and adapt. Jim further divided into this point by sharing a historical example, that of Hugo Steiners, an industrialist in Germany during the early 1920s. Steiners possessed the foresight to recognize the impending threat of hyperinflation and leverage it to his advantage. He took substantial loans in the local currency and invested them in tangible assets, securing his wealth and ultimately emerging as one of Germany's wealthiest individuals. This anecdote highlighted the theme that individuals are not powerless when confronted with economic challenges. Rather, it all comes down to the ability to foresee these challenges and proactively plan in response. Jim stressed the importance of learning from historical lessons and developing a deep understanding of the complexities of the economic system. To this end, he discussed how he applied complexities theory to the world of financial markets. Recognizing that these markets are inherently intricate and heavily influenced by the behaviors of human, he also integrated Bayesian analysis. This allowed him to make informed decisions even in situations where complete information was lacking. Jim also provided valuable insights into the Bayesian theorem, shedding light on its practicality in making initial assumptions based on probabilities and then in refining those assumptions as new information becomes available. This process of fine-tuning one's understanding over time is important in making more informed and contextually relevant decisions. Moreover, Jim introduced the concept of the Kissinger cross. This concept emphasizes the importance of striking a balance between having sufficient information to make well-informed decisions and possessing the necessary time and freedom to take action. Finding this equilibrium is of utmost importance when navigating intricate challenges. This approach, complemented by a level of humility, serves as a valuable tool in the realm of decision-making. In simpler terms, Jim's perspective entails commencing with the information at hand, adapting to one's decisions as more data emerges, and discerning the ideal juncture between comprehension and execution. This process is similar to the delicate art of cooking, where achieving the perfect balance of taste and timing is crucial. By mastering this, one can make decisions with precision, like having a reliable compass, to navigate the complex life challenges. To underline these principles, Jim drew parallels with his experiences in the Central Intelligence Agency, CIA. In intelligence and national security, complete information is a rarity, and decisions must be made even in the absence of certainty. This makes proactive decision-making essential in addressing critical issues. The discussion then shifted its focus towards ongoing supply chain disruptions. It was widely acknowledged that these disruptions were already a significant concern before recent events worsened the situation. The war in Ukraine was recognized as a substantial contributor to the challenges faced by the global supply chain. However, the conversation dug deeper into the root causes, with some participants highlighting the trade war initiated by former President Trump in 2018 as a pivotal event that set off this chain reaction. There was a shared sentiment that a common thread connected these disparate issues, and while the participants were wary of adopting an exclusively pessimistic outlook, they couldn't help but contemplate the gravity of the circumstances. The possibility of countries like China or Russia reducing their reliance on the dollar for international trade and holding fewer dollars in their foreign reserves could further erode the dollar's global standing. In such a scenario, there could be a shift towards another currency taking the lead as a primary medium of exchange for international transactions, a phenomenon known in economic circles as de-dollarization. Notably, Jim Rickards, leveraging his background in finance and intelligence analysis, has been a prominent advocate for these views, outlining potential scenarios that could lead to a significant departure from the US dollar's dominance in global payment activities. Inflation emerged as a prominent topic in the discussion, with all participants acknowledging its pervasive impact. Inflation was described as a politically toxic due to its unmistakable and in-your-face nature. The group discussed how inflation affected personal finances and purchasing power, emphasizing its tangible and direct influence on people's lives. The consensus was that it's an issue people can readily relate to on a personal level, as it affects their daily lives more significantly than abstract economic concepts. The conversation then gravitated towards the possibility of a recession, with some participants inquiring about whether the current economic conditions would lead to an economic downturn. The discussion evolved from the anticipation of a potential recession to the realization that they were already in the midst of one. The The definition of a recession involving 2 consequent quarters of declining GDP was explained, and it was noted that the economic downturn had already commenced, even though it was as severe as it could potentially become. The potential for a stock market correction was also a point of concern, with comparisons drawn between the current market conditions and historical market crashes. These discussions highlighted the risks and uncertainties associated with financial markets, coupled with the possibility of a significant correction in the near future. The experts underscored that their assessments were not made in isolation, as other renowned analysts shared similar views. Inflation once again became a topic of discussion. The experts unanimously recognized that the current inflationary pressures were similar to those experienced in the 1980s. You see, in the 1980s, inflation had 2 main drivers. One was called cost-push inflation, which happened when external events like supply disruptions caused prices to rise. The other was demand-pull inflation, which occurred because people out of worry bought things quickly before prices went up. These 2 factors combined to push prices higher. But in today's inflation, the experts noted that it was mainly due to cost-push factors. In simple terms, things like rising energy and food prices were making everything more expensive. The conversation also moved into the human side of inflation. Unlike many complicated economic ideas, people understood inflation well because they feel its effects directly. It affects their daily lives, from how they manage their money to what they can afford to buy, and even their financial well-being. It's something almost everyone can relate to. In short, the experts examined how inflation, which is essentially the increase in the cost of goods and services, is a significant and relatable part of our economic landscape. The recurring theme throughout the discussion was a connection of these economic issues and their significant impact on everyday lives. Whether it was the supply chain disruptions, inflation, or the looming prospect of a recession, the experts acknowledged that these challenges were intertwined and will continue to shape the economic landscape in the coming months. The gold prices have experienced a meteoric rise in reaction to increasing economic uncertainties. Investors seeking refuge from potential financial turbulence are turning to gold as a haven for their capital. This significant trend shows a growing recognition of gold's value as an asset in times of instability. The prevailing economic landscape, marred by the looming threat of inflation and soaring national debt, has led many investors to view gold as a secure investment option. Moreover, the complex web of geopolitical tensions across the globe can frequently result in market volatility. In such uncertain times, the demand for safe haven assets, of which gold is a quintessential example, surges as investors look for stability as a safeguard against financial upheaval. It's becoming increasingly evident that a growing number of individuals and institutions are recognizing the wisdom of investing in gold as a means of weathering unexpected financial storms. The allure of this precious metal, which has stood the test of time as a store of value and symbol of economic resilience, makes it an attractive choice for those seeking security in an ever-fluctuating financial landscape. The upward trajectory of gold prices and the strengthening allure of gold as a protective asset signal a broader paradigm shift in investment strategies. And that is all for the video, folks. Make sure to like, subscribe, and stay tuned for our channel for more. Thanks for watching. Bye!